So welcome all to the 9th episode of the X podcast Bitcoin as a Store of Value with me, Alessandro Ottaviani, and Francesco Madonna as co-host. We have today as a guest will be Sam Callahan, senior analyst at Swan, and he may be few minutes in delay, but we will have 90 minutes in total. So anyhow, we will have more than 1 hour to discuss with him. And the topic for today will be mostly on macroeconomics because he's an expert on this. He wrote several X posts on macroeconomics and on the importance of the institutional money flowing into the Bitcoin ETF. Sam will also be in Prague, and one of the panel that he will participate to will be exactly on the ETFs. Hi Sam, welcome in the space. Nice to get to know you first of all.
Hey guys.
Hi Sam.
Hey, I'm so sorry. I've been having all kinds of issues over here. Sorry for the tardiness.
No problem. We had also issues at the beginning when Francesco joined. Probably today is not the best day for X.
Yeah, but I'm excited to be here. Thanks for the invite, and I don't want to waste much time, but get right into it, guys. How are you?
Hello, I'm fine. Nice to talk to you. We had the same issue, and so you are pardon. No worries. Let's talk about Bitcoin markets, and then more importantly, the topic of the day, the U-turn from the U.S. government, SEC, and the ETF, Ethereum. What do you think about?
About the ETFs and stuff? Is that what you're talking about?
Yes, I mean, maybe we start from there.
This is the news of yesterday that the likelihood of the Ethereum ETF is now increased. Also, Eric Balkunas and James, and maybe the price had a good price for Bitcoin, but in the medium long term, it could not be a good things for Bitcoin. In the previous week.
Yes. Yeah, I mean, I think it's kept a lot of people by surprise, including myself, including James. And James is a friend who kind of spoke offline about it. Yeah, it came as a shock. I mean, it's basically they pivoted completely. There was multiple reports that there was basically no conversations going on, no productive conversations between the issuers and the SEC leading up to this point. And then all of a sudden, they just kind of flipped and said, like, hey, we need you guys to make these changes to your filings. We need to get these things updated and given to us in a couple of days. And now they're working around the clock to kind of get these things in. And so there's still a probability that they deny them. I mean, it seems like the probabilities have increased substantially that they'll be approved, but there is still a chance. And so the market could be getting overexcited. And then there's also the detail that these would be approving 19B4s, which is basically like changing the rules of exchanges to allow for a new ETF product to be traded. But that's just one step in the launch of a new ETF. There's also the approval of the S1 registrations, which is from each issuer. Now, those could be delayed where you approve the one, and then there could be a delay for the SEC to approve the other S1 registrations. So, for instance, when the Bitcoin futures ETFs were approved, it took 5 months for the S1s to get approved as well before it could actually launch and be sold to investors. And so there could be a situation here where they're approved and then they actually don't start trading for a couple months. And again, the market could be kind of getting overexcited, and we could be in for like a trading event where it pumps in leading up to the event and then it kind of goes sideways or drops, which I wouldn't be surprised, even if they approve it or deny it, that we could actually see ETH kind of tank a little bit after the decision, because the market seems very, very excited about it all. But kind of start there. I know it's kind of a lot, but we can go into some of the consequences and some of the details more, because I'm fascinated by this whole development.
We were talking. Thanks for the update. For example, for the Bitcoin ETF, the 19 S4 and S1 they were approved the same day. So the 10th of April was approved, and the 11 they could have been started to trade in the market. Great, good to know that in case Ethereum will take, you can take more time. For me, I think the biggest concern is one of the biggest misconception from the common people is that Bitcoin and Ethereum are in the same bucket or in the same asset class, and Bitcoiners are relentlessly saying no, they are two different worlds. And now having an ETF for both will be in favor of the narrative of those who say Bitcoin and Ethereum are in the same bucket. What do you think?
Yeah, I think there is a conflation, unfortunately, because the two couldn't be more dissimilar, I would say. I mean, they're different technologies, different consensus mechanisms, different value propositions, different communities, different goals. They really shouldn't be viewed as similar to one another. But unfortunately, for the average person who doesn't know much about this, it is very easy to just say, hey, let's just buy, Bitcoin and ETH. What's the difference? And that's a problem for sure. And if there's an ETF approved, it could be seen as a sign that of a stamp of approval from regulators. And it's just important that people understand the risks associated with Ethereum versus Bitcoin and the differences between the two. No, I just think that there's a lot of debate over right, if Ethereum's a security or a commodity, and it has been a topic of debate for a long time. And even if these ETFs are approved, it doesn't necessarily mean that the SEC is saying that, hey, we classify ETH as a commodity. That's not what an approval or denial of an ETF product is. I mean, the SEC is basically just saying that the ETF product itself, complies with securities laws and can, adequately protect investors. It's not any kind of classification of the underlying asset the ETF product tracks. And so I think there's a little bit of overreaction saying that, hey, just because they're approving this, it means that they think it's a commodity. I think there's been a lot of developments over the last year or so related to the consensus lawsuit, as well as the investigation into the Ethereum Foundation about the move to proof of stake. The SEC is actually investigating that, and whether staking or staking as a service is a security, regardless if it, technically the underlying asset isn't deemed a security anymore because so much time has passed. There's a statute of limitations with how these regulators can do enforcement actions around securities laws, typically 5 years. So since ETH ICO'd in 2014, that statute of limitations is up. But one could probably say that maybe that timeline reset when Ethereum completely changed its entire consensus mechanism and moved to proof of stake. And so now some of these lawsuits are revealing that the SEC is investigating Ethereum 2.0, specifically consensus and the Ethereum Foundation. How did that merge happen? And did these entities have outsized influence over the direction of the network? And what were the incentives there for them to want to push it towards proof of stake? And so that's very interesting. So I think we're going to see what comes out of those subpoenas from the SEC in regards to the merge and proof of stake and how they view staking and staking as a service with Ethereum. And that's where they're drawing the line with these ETF issuers as well. They're making them remove staking from the filings. And so I think that's where the battle is going to actually be in the whole Ethereum security commodity debate.
Thanks for all these details. Very, very interesting. And I think it's more and more important that Bitcoiners like us, they are discussing more and more on this Bitcoin and crypto are two different worlds, because I think some misconception from the past, used only by criminals or no intrinsic value, they are kind of fading. For example, no intrinsic value, if he's back after 15 years, he was dead 500 times, he's still there. So people are thinking less and less on this misconception, but the one Bitcoin and crypto is really important to the bank. And they're not easy also because I think everyone who joined it at the beginning, me and the same, Francesco, we're talking the same. When you join, it's easy. It's the standard way to say, okay, it's one asset class. Maybe we can discuss more about the macroeconomics. You are an expert also for macroeconomics. I listened to your also podcast with James Lavish on how is the situation going.
Yeah, can I just say one thing with relation to this ETH and the staking and all this
Sure.
stuff for a second?
Go ahead.
It's really interesting because if the SEC is not going to allow the issuers to stake, now on the surface, I would say one of the criticisms I had about any kind of excitement around an ETH ETF was the risk of centralization with these ETF issuers basically being able to stake their tokens. And then you have all these large issuers that are no doubt going to probably attract a lot of capital, suddenly being large staking institutions that cause centralization of ETH. Now, if the SEC is not going to allow them to do that, I think that's actually a good thing. But the problem is that only 27% of ETH is currently staked. And then over 50% of that is in these staking as a service providers. So the Coinbases of the world, the Kraken, Lidos, Binance. It's very centralized, and it's because people don't have the technical expertise or the funds to run a validator node themselves. It takes 32 ETH, so that's over $50,000 or so. So they use these staking as a service providers. Now, if the SEC is coming in and saying that is where we're drawing the line, where that's in unregistered securities, and these services are no longer, available to these investors, it's going to be very interesting to see how many people are going to independently run validator nodes, and if that jeopardizes the security of the Ethereum network in the long run. These are the kind of the dynamics at play, and this is why, Bitcoin and Ethereum are so different. And it's like just recently, Ethereum went through a hard fork, and people don't even realize this. It's like not even news anymore. But just recently, it did a hard fork where it decreased the transaction fees by 4 times. And that, because of that, the way that the supply issuance is, scheduled, I guess you could say, in Ethereum, that affected, because it's just an elastic supply, there's technically infinite amount of total supply with ETH, the supply changes, the issuance changes based on the fees and based on the number of stakers. So once they cut the transaction fees, actually now the inflation rate of Ethereum turned positive, like it's inflationary now. And that was one of the big narratives before, was that ultrasound money, it's deflationary. But then they make this upgrade, hard fork it, and then suddenly it's inflationary now. And that could change with the fee schedule, the amount of fees and activity on the network. But right now it's inflationary. And even after that upgrade, the Ethereum Foundation came out with a proposal that they want to change the annual inflation rate of Ethereum. And they actually want to reduce it from 1.5% cap to a 0.4% cap. But that's not like, even if they want to make it scarcer, that's not the point here. The point is that it continues to change. The point is that it's not resistant to change. And that's the beauty of Bitcoin. That's why it can be a long-term store of value, is because of its immutability, and that it's unchangeable in a world full of things that change at the whims of humans who try to tinker with things to try to improve it. But there's always second-order effects and long-term consequences that they couldn't foresee that actually impact the network. And so with Ethereum, you could even say they're trying to tinker it and technically improve upon things. But the more changes that happen, that's very unattractive to me, to invest in something that changes its monetary policy frequently. Bitcoin has always had 21 million. It's very resistant to change. It has a very strong, perfect track record for maintaining that consensus. And so if you're comparing Bitcoin and Ethereum, that's what people have to understand, is that one seems to change a lot. And that change comes with unanticipated consequences and second order effects and increased complexity, which increases the attack surface. And I don't think that's very controversial thing to say. That's actually what history has shown us with these upgrades. Bitcoin, on the other hand, always has stayed the same from the beginning, from Satoshi. The immutable nature, I think it's something that shines over time. I tweeted this today. It shines over time. And as everything else changes and fluctuates, and Bitcoin stays unchanging. And I think as we move forward, more and more people will understand that over time. But it just takes time to kind of build that track record and for people to wrap their heads around why Bitcoin's unchangeable nature is its greatest asset. And so wanted to just wrap that up, but I think it's a very important point.
And definitely. And in fact, Satoshi, in one of his email, wrote the famous quote, Bitcoin protocol is such in a way that once version 0.01 is released, the core feature is written in stone and will never change. And then is one of the strengths of Bitcoin. Another, maybe we can also add the point that in Ethereum, there is the smart contracts. You can do something on top. And this is also another misconception. People think, okay, but Bitcoin is just increasing price, store of value so far. We need to do more. While in reality, it is the most important feature. And for money to be money, the less they have other utility, the better is for an asset to be money. So on this is also another advantage for Bitcoin, while other people can think that is a disadvantage, especially people who didn't study money.
They're just different. They're completely different value propositions, in my opinion. And different. One's trying to be a digital sound money and store of value and build upon that strong foundation to potentially, grow into a medium of exchange, a more widely used medium of exchange over time. But just different, and that's how people should view them. Just completely different.
Yes, Francesco?
Yeah, it's a software as a service on a blockchain, which W's use cases. Because aside of time and decentralization, I don't see much use case for a blockchain. And the best, what is the blockchain but to be the best for use case of time and decentralization? Of course, Bitcoin. So even if you have do something on top, you do better on the blockchain. But unfortunately, okay, I think Ethereum saved itself from doomsday with this, but it will come eventually. Anyway, what will happen now is that the same ratio of allocation will take place. So this fund manager will tell them to the people, put 70 on Bitcoin, 30 on Ethereum. Some funds will flow, and that will stay afloat for another while. And we have to explain to the people that what you just said. And that's so boring, and I don't know what to do, but that's how it is. I don't know if you have another view.
No, I mean, I think, look, I mean, I'm all about the free market, and I think Bitcoin's, consensus mechanism of proof of work, its decentralization, its security, and its monetary policy, its monetary properties are just superior. And so, just because Ethereum ETFs get approved and improves access to that, I think over the long term, Bitcoin wins out just because of its technology and its monetary policy and properties. So it is what it is. I'm all for fair competition. I think, like what I mentioned before, it's like there's still a lot of debate in terms of, to me, there's regulatory certainty with Bitcoin. It is a commodity. There's also, to me, regulatory certainty with everything else outside of ETH as being basically unregistered securities. And that's just not me. That's literally the SEC and these lawsuits. They specifically name other cryptocurrencies like Solana, like Avalanche, like Matic, like Cardano. They specifically go into detail about why these things are unregistered securities. But notably, they didn't include Ethereum. And I think Ethereum's the one asset here that in the regulator's eyes, this isn't mine, but in the regulator's eyes, there's still cloudiness in terms of how they're classifying it. And so I think if you're an institutional investor or somebody managing a lot of money, you still, there's Bitcoin in terms of everything else, in terms of just the regulatory clarity and the lack of regulatory risks around it. It is a commodity. And I still think, with Ethereum, there's still a lot of uncertainties in terms of how they're going to classify it, as well as even maybe not itself, but also how you staking as a service and all these other things. There's still a lot of uncertainties.
Yeah, but this U-turn is still a part of the macro picture, because if you think about what happened a few weeks ago, there was Trump talking in a good way about crypto, and then the current administration changed So the rumors are about that, and then they're going to be an approval. But so if then inflation came down, the official rate, and then if we count everything, adapt everything, then it's clear that the macro picture is changing. And if we are going towards the U.S. election, they would like to print some more money, and also to sustain this bull run will be sustained by all of these factors. To what point do you think we are in the macro picture? Do you think we can classify this political U-turn as a factor which enhances the bullish framework of this market?
Yeah, I mean, right now, I think, look, it's hard for me to see asset prices moving down meaningfully when the fiscal authorities keep spending money the way they are. I mean, there's just so much money still sloshing around the system, even from the pieces of legislation passed years ago, like the Infrastructure Act. That money is still making its way into the state and local governments of how they're spending it into the economy. So it's like there's a lag effect there, and so they just keep spending multi-trillion-dollar deficits, and then the Fed's interest rate policy just further blows out that deficit. It's all inflationary, and then there's a lot of other I would say structural inflationary forces at play here, and in terms of deglobalization, in terms of increased geopolitical tensions and war. I mean, there's nothing more inflationary than war because of the disruptions in the supply chains, which adds inefficiencies to the supply chains, which drives up the cost of goods, leading to higher prices in commodities like oil and all these things, as well as just the spending that occurs during wars. I mean, it's great charts going back. Whenever there's outbreaks of wars, you get increase in the cost of living, and then increase in government spending. And so you add that on top of we're already running $1 trillion deficits, and there's increased geopolitical tensions breaking out in the Middle East, as well as in Eastern Europe. That just adds to the inflationary pressures all around. And then you have things like tariffs. That's another thing, in my opinion, that does lead to increased inflation domestically in the United States. You have things like the expansion of the Social Security income to include people that have, accepted food stamps. That's more money in people's pocket, more government spending. So all these things are just more government spending. And this is why I believe that we're entering into this long-term inflationary period where paper is going to suffer. So bonds are going to suffer, which is what we've seen. Cash is going to suffer, and equities will probably do okay. Certain sections of the stock market will do well. Certain will just keep up with the pace of inflation. And then hard, scarce assets typically do really well in highly inflationary environments. And so real estate, certain commodities, infrastructure, and then obviously gold and Bitcoin. And in my opinion, just Bitcoin is the only one with that inelastic supply. It's extremely scarce. It's the most scarce. It has benefits to other hard assets like its digital nature, and it's very small. It's just by market cap, it's very small. And so all that presents a really asymmetric investment opportunity in that macro environment of increased government spending, sustained high government spending, and persistent inflation. And so that's kind of how I'd summarize it. And so really the bear case for Bitcoin is responsible government, responsible, austerity to cut back on spending. That would probably be a bearish case for Bitcoin. And I just, obviously don't see that. I actually see the opposite of just increased spending, increased fiscal recklessness. And so that's good for Bitcoin.
I think also, yeah, I totally agree. And but I think even if they want to cut spending, now the genius is out of the bottle. The the deficit is 1.8 trillion, plus even the interest on the debt is increased to 1 trillion. Also, thinking that it is more than all the overall budget for defense for US, it's kind of huge. Like the all defense money spent in defense from US is less than the interest on the debt. It will it will keep increasing. So, plus we have the year of the election. So definitely they will spend, they will print money. So it will be for sure beneficial for Bitcoin. One question on the actual macroeconomic situation is also a bit surprising that with interest rate above 5% for more than 1 year, we are the equity market is still doing so good. I think last year most of the macroeconomics were saying that they will cut the interest maybe at the beginning of the year or the end of the previous year, otherwise the market will collapse or we'll have a recession. But we are now in May 2024, and the Dow Jones and the S&P 500 also made the all-time high. This is due to printing money or to what else, in your opinion?
Well, I think, a lot of these corporations had access to cheap debt for a really long time and were able to term out their debt when rates were much lower. And they haven't really felt the sting of high interest rates like some other interest rate sensitive sectors, like the commercial real estate, for instance. So a lot of these equities, a lot of these companies have actually done pretty well and haven't really felt the sting of high interest rates because their debt's kind of termed out for a long time. So they have many, many years until they have to refinance their debt. And I think, like I said, equities can be seen as like a scarce asset as well, to an extent. Like there's only so many shares available for these companies, public companies. And when there's so much money sloshing around the system, there's so much government spending, so much easy policies, the stock market benefits as well. And so I think that's part of the reason why you just literally you still have a lot of money sloshing around, and people need to put it somewhere. And the stock market's at one place. And I think the recent bond performance in real terms, there has been kind of a rotation out of some fixed income and into the equity market. And so, yeah, I think so it's the lag effect of the interest rates and the fact that these corporations were able to term out their debt and basically aren't feeling the really effects of these high interest rates yet, if they stay this high. And then the fact that there's still just a lot of money sloshing around, they have to go somewhere. And the equity market the U.S. stock market is a pretty good place historically to invest. And so I think you just have a lot of, money kind of sloshing around the system and ending up there. So that's probably how I'd answer it.
So thanks. So on one side we will have more people will have like more money to spend, and on the other side now we have a vehicle in 2024 where institutional money or retails can in a easier way flowing into Bitcoin. Obviously referring to the Bitcoin spot ETF, which has been your impression of the first 4.5 months?
Yeah, so the ETFs definitely do wonders for gaining exposure to Bitcoin. I always want to say that because it's not the same as owning real Bitcoin, as we know. It's convenient, and people pay for that convenience in the form of increased risks of trusting somebody else to hold the private keys, and there's counterparty risk as well as annual fees. So you pay for that convenience and you have to trust somebody else. So it's not really using Bitcoin in a sovereign way. And I just have to point that out because taking ownership of your Bitcoin is really empowering and reduces the risk. But these ETFs have done wonders for making Bitcoin exposure more accessible. Just very, very easy for somebody to buy it just in their brokerage account, but very specifically for institutional investors who may have been restricted from owning spot Bitcoin for regulatory reasons. So they can now access exposure to Bitcoin just via security, just like everything else with these Bitcoin ETFs. And they've obviously were extremely popular. I mean, they shattered records in their first 4 months in terms of ETF launches and assets under management. It's amazing to see just some of the largest financial institutions pushing out Bitcoin education, and the performance of Bitcoin has done wonders too, just to get people's eyes on it and wake people up, being like, oh, wow, this thing's back. This thing's back stronger than ever, making new all-time highs. And others, these ETFs, and got BlackRock and Fidelities of the world educating people on Bitcoin. I mean, Wall Street takes notice of that stuff. And what's interesting to me is that there's been all these filings that have come out, and primarily it's been retail investors in this first wave. About 80% of the buying estimates to be retail, which is really bullish to me because it's broken records and it's been primarily retail. All the big money is in institutional investors, but they take time to wrap their heads around new investments, and some of them even have to do due diligence for a certain amount of time on a new investment product, say like 6 months or so. They have to watch it trade, make sure it's good before they incorporate it into their, portfolios. So it just takes time for these large institutions to pull the trigger. And so that's still ahead of us. And it's going to be, a tailwind for Bitcoin at the end of this year, I believe, as well as the next 5 years and 10 years, as these large institutional investors start to allocate to these Bitcoin ETFs. The one thing I'll say is that you had like large hedge funds like Renaissance Technologies, Millennium, some of these other ones. You got to understand that those are like quant funds. And so they basically have like arbitrage strategies and have an algorithm that goes around and looks for arbitrage. Like specifically Renaissance Technologies, the late Jim Simons, that's literally an algo that just runs around and looks for arbitrage across all different assets. And so people were like, oh my gosh, Rentech owns Bitcoin. The average holding period for one of their investments is like 2 days to a week and a half. And they trade everything under the sun. They don't care what it is. They'll just trade anything they find, any kind of market efficiency. They'll try to benefit off it. And so it's important just to like understand some of these funds. It's not necessarily that they're like long Bitcoin because they believe in Bitcoin. It has to be a wet blanket, but they're quant funds. But now the Millennium one's interesting because they're actually like a multi-strategy firm, and they own a lot of these ETFs. They own over like 2 billion. So you got to think at least some of that allocation is actually maybe a more long-term holding, like they actually kind of believe in the thesis a little bit, along with some of their quant strategies. So it's not all just like quant, but I wanted to at least, be honest about some of these hedge fund allocations, because hedge funds do crazy things. They trade, they're looking for opportunities. They're typically more short-term focused. But what's really exciting is to see like financial advisors, family offices, broker dealers, some of these ones own these Bitcoin ETFs, because that's a sign that like, okay, they're recommending them to clients, and it's just the beginning. It's really, really early days in terms of the adoption, and there is trillions and trillions of dollars that they manage that I think are eventually a portion of that is going to get allocated to Bitcoin ETFs.
Do you think that the reason? I see the ETF. Could see like the early investors in Bitcoin use the exchange, and then eventually learned that some of them, percentage of them, even not all of them, move to self-custody. Maybe some we start with the ETF, and then they will change their mind. Of course, they cannot withdraw the coins, so they have to sell, at least in the US, and not in Hong Kong, where they can have the underlying asset. But you think there is some technological advancement to be done to enhance the possibility of people to get into self-custody? Also, is it just a matter of mindset of fear because they are not knowledgeable enough?
Do you mean specifically with the ETFs or just in general?
In general, do you think is it more a fear or the lack of technological advancement, banking grade solution, or so on? What's in
terms of? I'm not sure if I understand. Like, so if there's innovations out there that are going to make it easier for just individuals to self-custody.
Yeah. Is that a cost that the majority of people don't self-custody, or the cost stays on the fact that people are unaware, they don't know, it just takes time?
Look, I think taking self-custody is a little bit farther down the funnel in terms of everybody's Bitcoin journey. I mean, they start out, you just buy a little bit and you're interested in like the price increases and you start learning about it. Then you start learning about the importance of self-custody. And I do think these ETFs are going to turn into like a top of funnel. And then once people learn about it, I do think a percentage of them will be interested in buying actual Bitcoin, will sell their ETFs and get actual Bitcoin and then take self-custody of it because they'll understand the benefits of doing that. And you are seeing this, like I think Corey has actually called this the ETF multiplier effect. You've seen increased volumes across spot Bitcoin brokerages after the introduction of these ETFs. It's been rising. The tide has risen all the boats, and you've actually seen more demand for spot Bitcoin as well after these ETFs. So I think that shows that people are interested in taking self-custody. But it is a little bit further down the rabbit hole. I mean, it takes responsibility. It takes, you have to learn how to do it correctly, because the worst thing is security is so important. And, you can't call up somebody to fix your mistake if you make a mistake. And that's the responsibility you take on by actually owning your wealth and owning Bitcoin. Now, there's a lot of things that advancements over the years, like in the beginning, the early days, the loss rate of Bitcoin was really high. And that's why like an estimated, 3 to 4 million Bitcoin are lost forever. In the early days, not only was it not that valuable, so people were more careless, but the custody solutions were just not that great. I mean, people literally kept them on paper wallets. Paper wallets were how people use them, and they would get damaged and they're not good. And then, the industry moved forward and innovated, and then became hardware wallets, which made it easier. The community has since further innovated, and now there's collaborative custody solutions, which adds redundancy. It's like a little bit of a safety net. If people mess up, they can, work with an entity to recover their keys and certain 2 of 3 schemes and whatnot. And so there's been innovations by the industry to make self-custody more easy over time. And there's always a spectrum of custody solutions that's not right for everybody. I mean, some of these institutional investors literally can't take self-custody. And so they have to have really good institutional grade custody solutions. And in the beginning, there wasn't even those. Like, it was basically Mt. Gox. And obviously we know how that worked for people who held their coins there. Not good. But now there's institutional grade custodians that are SOC 1, SOC 2 compliant. They've went through audits for their security. They have pretty decent track records now. And so I'm really bullish on just the spectrum of custody solutions available for all different types of investors, to the hardcore Bitcoiner that wants to take self-custody, to collaborative custody solutions like Swan Vault and others, to full-on custody solutions with third parties that some people have to take for different reasons, that are much more safe compared to the early days. And I expect all that to continue. Like, I'm really bullish on mini scripts and the ability to kind of like programmatically put in some of these safeguards. And I think that's just going to evolve over time to become easier and easier and easier and easier. And that's what I hope. And I think that's very important to improve the UX, make it as easy as possible to self-custody in a way that the user actually has full control of the funds. But then there's additional protections and redundancies, and to get creative and innovative with how to do that. And so I've been pretty bullish on the developments over the last 5 to 10 years, and I see no reason to think that that won't continue.
Yeah, I agree.
And later on, there will be more and more demand. Also, more demand will also trigger a further development of self-custody. Once there will be more and more people owning from ETF, from exchange, then there will be even more demand of self-custody. This will trigger also the development even more better speed. Another topic we would like to discuss in this space will be: do you see an inflection point in terms of maybe your time or price where above this, probably the most of the narrative against Bitcoin or will have to stop or will decrease significantly? For example, when Bitcoin was 1620K from 69, we Bitcoiners almost stopped to actively promote Bitcoin. There was also all my contacts, they were not discussing, they didn't want even to discuss. And this will be the opposite. Once we reach maybe 120K, all the journalists, mainstream media with video on YouTube, New York Times, Financial Times article against Bitcoin. Do you foresee that at one point, maybe not stopping because someone will be still stubborn, but will be a significant decrease of the narrative against Bitcoin?
Yeah, I mean, part of me thinks that we're at that inflection point right now. I mean, after the 2022 bear market that was really brought on by the broader crypto industry and all these, blow ups and shenanigans going on there. I mean, a lot of people thought Bitcoin was dead. It dropped from 69 all the way down to under 20. It kind of invalidated some of these narratives that Bitcoin never breaches its prior all-time high. That was one of the common narratives. Like, it's never going to go under 20,000 again, but it did. And here it is, just kind of rallying back up, like a phoenix. And I think with these, the Wall Street has taken notice. I think the sentiment shift has been very evident over the last year or so amongst a lot of respected investors. People are changing their tunes on Bitcoin. And I think recapturing the prior all-time high and going over 70, now we're kind of bouncing around sideways, chopping. But I think we're at that inflection point right now already. I think this is it, Now I think getting over to 100K and into the 6 digits, I think that's when the broader retail, person is going to start texting you, and it's going to be like, oh my gosh, because they're just not aware of what's going on yet. I think only the smart money is paying attention again. I think once Bitcoin gets into 6 figures and who knows, like at that point you're in price discovery, and I don't really know. I'm not going to say how high it's going to go. I have no idea. But once it gets into 6 digits, I think you'll start to see more retail involvement. I think you'll see increased trading volumes across all these exchanges. I think you're going to see a lot of speculation and fervor and everything you expect to see. Once the bull market really comes into full force. I think we're still in the early part of that bull market. And it's going to be really exciting. For me, I think also like one thing that's been on Bitcoiners' minds for a long time is just gold market cap. I think it's up around like 600,000 a coin or 700,000. That would be something that I would be like, wow, that's amazing that it actually overtook gold's market cap. So that's a more long-term goal. But that's something that I'm definitely keeping an eye on, and it's going to be very, very notable when it happens. So yeah, that's kind of my thoughts.
Thanks. And I think before the gold, taking the gold, I think another level will be 160, 165K, because it will pass all the other companies, Saudi Aramco, Google, Apple. So it will become the second asset, the most valuable asset in the world. And probably also at this level, those who were against, at least they will maybe silent if they don't become in favor, because there will be very few arguments. And as you are describing, once we reach maybe 100K or more, we may assist to the Bitcoin rush, taking the sentence from the gold rush in 1860 in California. But in this case, it will be global, and it will be much faster because anyone could access with a brokerage account or with a smartphone. So it will be definitely an interesting movement once we go above 6 digits.
I think the problem with understanding of Bitcoin, there will be this bull market, massive volatility, but the volatility is difficult to be for a normal investor to classify it as something valuable, because he has no knowledge that it really beats inflation, because he doesn't know there is a inflation problem as bigger than the official CPI. So we can see, look at the volatility and be happy, because we have a prior knowledge of the true economic condition. But the majority of people, they don't have this information. So they, even if they will speculate on it a lot, because they see this volatility, they wanted to make money out of it, but they unfortunately they will not hold it, because they will not understand for a long time. They will not understand the volatility is a feature of Bitcoin and solves the problem of inflation. That's a problem. I don't know if you agree with the underlying obstacle of retail into allocating for a long time is the lack of knowledge. They don't see this volatility as a positive feature of this asset.
Yeah, I mean, it's funny because they should love volatility. There's no reason to be afraid of volatility. I don't know. I'd be afraid of like holding my money in cash and having a steady, so-called steady decline in my purchasing power that's guaranteed, and it's only increasing with these inflationary policies and the unpredictable nature of them. So I embrace the volatility, and then just say that you got to zoom out and understand that things are going to be volatile. It's naturally a volatile asset, but over the long term, just look at the general trends, and that's the easy way to kind of address that question. With anything with volatility, I mean, everybody's risk tolerance is different, and the most important way to benefit from Bitcoin as it appreciates over time is time in the market. You gotta hold on to it. And some people are gonna really struggle with the volatility because they just don't have the disposition to handle it. They get scared, they get risky. So you really want to be careful with over allocating, because if it's really volatile and it causes you to make a mistake and sell it, and you're not going to benefit from Bitcoin's price appreciation over time. And so that's what I mean when I position sizing and understanding your own personal situation and your own risk tolerance, what you can handle, what you can afford to risk by saving in Bitcoin. I say risk like in a more like investment term. I actually think it's pretty not as risky as other assets. But you have to know what you can handle, because the most important thing is holding on to the volatility to benefit from it. And so some people, that's crazy, like really high, like 90%, 100%. They're really convicted in Bitcoin and they can handle that volatility and they're on. For some people, that might be a bit smaller, but the important thing is to be able to hold, to benefit and to save over the long term in Bitcoin. And so that's what I say about the volatility to people. It's necessary. It's a characteristic of this asset, and manage it with proper risk management and position sizing.
I find always fascinating that with let's say a basic and even boring strategy, buy and hold, we will likely outperform any financial advisor in the next years and anyone or most of those who will be trading Bitcoin. And second, also fascinating from how counterindicative Bitcoin is, because if we speak with common people, once they know that we are very exposed on Bitcoin, the first thought is, oh, so you really like risk. But for us, it's like, no, we are risk adverse. That is why we are so heavy in Bitcoin. And this is something that people need time to digest and to understand.
Yeah, I am.
Do you think also as a risk reward, especially this year with the approval of the ETF, of legitimization of the asset, has never been so much in favor for Bitcoin? For example, in 2017 or even 13, people could have even had more return, but the risk was much higher than it is now.
Oh yeah, hands down. I mean, the amount of advancements in the industry since I've been buying it, I mean, it's ridiculous. I mean, I brought up some of the self-custody improvements, but across the board, I think Bitcoin's only grown stronger in terms of adoption, on the regulatory front, on everything. The risks have subsided over the years. And, even though Bitcoin's price is higher, I think there's still substantial upside. And from a risk-adjusted standpoint, it might never have been better than than right now. I think trading it is so tempting. People try to time it and they try to collect a little bit more coins. It's just important to understand how Bitcoin's price moves historically. And the fact of the matter is that for the most part, it trades either sideways or down. I think that's why maybe hodling feels so hard, because literally for the majority of the time, Bitcoin is not going up. It's actually going sideways or down. And so you can kind of feel like you're dragging along like the last 4 months. But how Bitcoin moves is it's basically an elevator straight up. It just rockets up in short time periods, in little spurts. And you can't be on the sideline for those. Like, you just can't, or else your total returns over a long period of time is terrible. Like, and so I think I ran the numbers, and it was like looking at the top 15 3-day trading periods in Bitcoin's history over the last couple of years. And if you would have been trading and missed those days, so like 45 days out of 2 years, if you would have missed even some of them, you would have somehow managed to lose money if you missed all of them at a period where Bitcoin almost tripled in value. And so you literally can't miss those days, and it's impossible to time when those days are going to happen. And so you can try to trade it, but it's really important that you're in the game when Bitcoin does what it does, which is when it shoots up in really short bursts. And the last thing I'll say about trading is most people don't take into account the tax consequences. It's like, so if you're trading, you're basically betting. Let's just say that you're going to hold, you're going to stay out for a year or so. Let's say it's only long-term capital gains tax. So you held for a year and you sold your position because you wanted to buy in lower. You would need it to drop greater than 15% even to come out on top on that trade. So you're basically betting that it's going to at least fall 15%. And then from there, you're only stacking a little bit because you have to pay long-term capital gains on that position anyway. So it's a pretty hefty bet to make. You got to basically think that Bitcoin's going to drop greater than 15%. And then you're going to have to time it to get back in. And that's even the harder part. Even if you get the trade right and it does drop greater than 15%, you got to have the cojones to jump back in when Bitcoin's bleeding out. And it's not an easy thing to do. You have to be right 2 times. You have to sell at the right time, and then you got to buy back in at the right time. And so I do think that holding is the right strategy for vast majority of people. And it's something as volatile as this, you're really making life hard for yourself and more stressful than just stacking sats and chilling and just letting Bitcoin do its thing.
Totally agree. I also believe one of the reasons is this. So Keynesian economical system is trying to push to have less savings. So people don't have so much on savings. That's why they want to bet, they want to gamble, and they want to do even more. They look for altcoins because, as you said, we should not look at Bitcoin price that is 69,000. If we think 69,000 only in absolute term, yes, it sounds expensive, but we should look at the potential. And it will reach to reach gold market cap, it should be more than 600K. And many analysts are saying the potential of Bitcoin is even 1 million by the end of the decade, meaning in 6 years, 15x. And also, if you have enough savings, 15x in 6 years, it should be more than enough. Maybe the problem is not this 15x, but is people are not saving enough. And that's why they wanted to gamble. What do you think?
Yeah, I mean, it's greed, right? It's like financial nihilism, and you basically just YOLO into any kind of penny stock or meme stock. And then if you lose it, it's just like, whatever, you're still just in your mom's basement, just poor if it goes to zero. And if you get it right, you could potentially make a real meaningful difference in your life. And that's what people really want. They just want a way to afford their life, move out of their mom's basement, and maybe get a girlfriend, maybe get a place of their own. So, that's kind of that's the symptom of money that has lost its value and wages haven't kept up with the inflation rate. I mean, this is the sad reality. And so you have this increased speculation that occurs, and that's kind of what you see throughout history during periods where the money's broken. You see rampant speculation. And, obviously Bitcoin, I think people with Bitcoin, there has to be a little bit of a long-term patience with it. It's not gonna, it's a get wealthy slowly scheme in a way. If you want to get rich next week on it, I mean, you have to learn how to hold to benefit from that upwards volatility. And it can make a really meaningful change in your life over, 4-year periods and more. That's kind of what we've seen, is anybody who's held it for like 4 years plus sees a pretty meaningful difference in their purchasing power. So it allows you to save, and that's really what people should view it as. And so it's really just greed. It's greed and wanting to get rich fast. Be grateful for the stack you have. Just be grateful for the Bitcoin that you have. Keep working hard, keep providing value, keep stacking sats, and know that like what seems like maybe a little right now could be meaningful in the future. And that's the power of a money that increases in purchasing power over time.
Maybe some people are missing the history of money, the Austrian economics concept, but they can get in, as we said before, by spotting the right amount for them, the sweet spot for them, and that will do. And then to that regard, I believe that the financial advisor will actually help these people to find that, because they cannot teach them about the history of money or Austrian economics. Of course, they're not going to do that, but they can help the people to allocate the 2, 3, 4%, which is small for an individual, but taken as a whole is going to be very bullish for Bitcoin. So there are many factors, many that you need to have some knowledge of history, and also study Bitcoin, and then allocate the sweet spot if you want to raise the stake and hold through it, because holding is not easy, holding is hard. But the Wall Street will help at least with one factor, which is the right allocation. That is fair to say that.
So what's the right allocation? Is that?
Yeah. I mean, the right allocation for the person. I mean, if somebody knows nothing, he wants to start slow with the sweet an amount he can afford to lose. I don't know, like it's always been said, and then he can study more and try to raise the stakes, according to his knowledge. You don't want something, which. But the financial advisor are good. I mean, it's the classical economical study. What they teach them is to allocate accordingly to their knowledge. So to this point, the Wall Street movement will make a favor to this asset. That's fair to say that.
Yeah, I think that's fair. I mean, you can start out with a little bit to get skin in the game, and then most people, once they invest, they take the time to learn about it because they have incentive to do so. And then it's like that Peter Lynch adage of, only invest in what you know. And so when more people understand Bitcoin, I think they're more inclined to invest it, but also more importantly, build conviction to hold it for the long term. So agreed completely with what you're saying.
On one side, I think till last year, I was saying, take your time to read, to study, and convince yourself. And now I'm also to say, for sure, the recommendation is always to study, but I also add study, but do it quickly, because the train is leaving. Also, what I'm saying, the most asymmetric bet is now. Maybe in 2 years it will be much higher. For sure, it will always keep going on, going up, but probably the two more rewardful year will be 2024 to 25. So I also add now study, but do it quickly, meaning also you have scarce time. It's time maybe to deprioritize something else and start to prioritize studying Bitcoin, because in 2 years they can do for sure, or in 3 years, but then the reward will be much less.
Yeah, I would also quote Chamath, the bright investor. he said that the internet has made the facts a commodity, so the true value stays in the speed which you can grab it. That's maybe an explanation of the network effect, because you find a lot of BS over the internet, but you can also find the true value if you know where to look at.
Yes. We are approaching also the end of the space. Sam, firstly, I saw that you will be in Prague, right? Also in the one of the ETF panel.
Yeah, I will. I'll be on. I'm really, really excited to go to PTC Prague. It's going to be an amazing event. I heard such great things about it before, so very, very happy to go check it out. I've never been to Prague. I'm going to be traveling across the pond. I heard it's a very beautiful city, great beer. Excited to chat there. If people are listening, they can use the promo code Satoshi to get 10% off if they're interested in buying tickets. But yeah, I'm excited. Are you going to be there?
Yes, I was also last year. It was there was also Michael Saylor, Breedlove, Safety. It was a great experience. I will be there as well. I live also in Germany.
So we can grab a beer.
Close to Prague.
Nice.
Definitely, Francesco should be there as well.
Yeah, we'll be there as well. Yeah. We had the industry day, so I'm gonna pitch. So yeah, we'll be there.
Oh, cool. Hey, yeah, let's meet up in person.
There will be side events in the evenings organized for Bitcoiners. So yes, totally. In the last minutes, which will be the last message that you would like to give to the listeners, Sam, on Bitcoin overall?
I would just say now's the time to get your security right. We talked about self-custody, so just make sure that everything's safe. That's the worst thing. I always just try to, personally, I try to prevent the situation where I somehow mess things up and lose my coins, and then I have to watch Bitcoin go up for the rest of my life. So I think that should be everybody's goal as well. So make sure that your security is right before this bull market. Do a key check and make sure that everything's safe and sound. And then, I would say patience is good. Bull markets are very crazy. They get very noisy. Just stay focused, stick to your plan, whatever that plan might be. And just enjoy the ride. I think, the bear market was pretty brutal and bull markets are fun. But just stay disciplined, stay focused, and enjoy it.
Thanks,
100%.
Francesco,
it's also bull markets are also very energy consuming, because a lot of people will come to us asking for. So another advice, if you're knowledgeable about Bitcoin, let's prepare a draft email or something you can easily share, because a lot of people reach out to you asking, based on my previous experience. I don't know if you agree.
I think we also not prepare for what happened once it is 100, 120K. Then most of the qualified people who are at least 30, 35, who start to have savings, investment, is a common topic, will start to reach out to us in a like 1 or 2 order of magnitude more than now. Thanks a lot, Sam, for participating here. We really enjoy the conversation, and I'm sure also the listeners have also learned a lot from you and from your experience. Then thanks, Francesco, also for co-hosting this event. Next Tuesday, we will have the next space with James Lavish. Again, we will go on macroeconomics and Bitcoin. Will be another great conversation. Then, Sam, see you in Prague, and let's have a beer there.
Absolutely. Thanks for having me, guys. Have a great day.
Bye all.
See you.
Thanks.